Today, I'm going to be showing you a step-by-step guide on how to find and evaluate the best marijuana stocks in 2019. And I'm going to be concluding this video with some strategies that you could use to get in and out at a good price position. The reason that I'm going to be making this video is because I did another video a couple weeks ago on my top picks for marijuana stocks in 2019, and I got a lot of comments for people who had invested in other marijuana stocks or were in the process of holding a swing position and wanted me to analyze the specific positions that they took. But because the goal of this channel and the mission statement of this channel is to help you guys become self-sufficient traders and investors in the stock market, as well as to provide you with a short, sweet, and simplified way to understand the concepts, I've decided to make this video with a step-by-step guide on how you can evaluate your own marijuana stocks in 2019. And as always, all I ask for in return is that you hit that like button and also subscribe for more short, sweet, and simplified videos on how to trade the stock market. Okay, so before we start today, if you have any questions, there are two ways to get into contact with me. The first way is to comment below, and the second is to post in the ZipTrader Facebook group. Either is fine, but the Facebook groups makes it a little bit easier to answer and provide value to other people in the long run. Totally up to you, and I'll answer the question either way. Okay, so the first step is obviously to find the marijuana stock that you want to analyze. If you have already picked a stock that you want to analyze, you can skip this step, but there are a few ways to do this, and I've put a link in the description below with an exhaustive list of marijuana stocks. But the simplest way to do this is to simply get a list of marijuana stocks that are trending higher by Googling it or scanning for stocks in the marijuana sector specifically. But the key here is that we want a stock that has high volatility so that we can buy in at a discount and then sell out when the price recovers. We also want a stock that has high volume so that we can quickly get in and out of a trade. So a quick way to determine whether or not these stocks fit this criteria is by quickly typing in the ticker in your trading platform, or even just in Google, since we're mainly looking for price volatility. So choose some tickers and plug them in to see if they fit the criteria. See, Crone is obviously a well-known one, but it's a great example to start with because it fits both requirements and has a lot of potential to trade off of. We see a lot of volatility and volume, but as you can see, volatility is important because it offers many opportunities to buy in and profit. Okay, this checks out, so I'll show you guys just a few more so you get the idea. Now with GBLX, it has some good upward potential with it breaking down from 156 a share all the way down to about 20 cents a share. With this, there's great upward potential, and you can also note that we also see a breakdown past long-term support, but we're seeing signs of it being oversold on the RSI, which could be a solid sign of a reversal. I also don't love the fact that it has a consistent downward trend pattern because I like to focus on winners. I talk about this a lot, but I like to focus on winner stocks that are making consistently higher highs over the long run at least. What we are looking for in this step is just volatility and volume, and both check out, so we're good to go, and this one gets a pass. Okay, great. So the next one is GRNH, which also has volatility, but not recent volatility, so this one doesn't actually check out for me. Again, if it doesn't have one of the two criteria, I don't want to trade it, I don't want to invest in it, and I don't want to take a swing position because it has to have all the criteria that I'd like. So this fails the criteria, so we won't be looking more into it. HLIX has the same problem. Volatility was too long ago. I don't like it, and I don't want it. I don't like this stock. When you're trading stocks, you want to be like a spoiled brat. You do not want to take a stock or a position if you don't have the best setup. Everything has to be perfect. Okay, so now that we have two tickers, let's go to the next step. So the next step that I like to do is the following. I call this step the location verification, and I use it as a way to filter out some ridiculous companies that are promising big things but are unlikely to succeed at them. So go ahead and Google your company. For this example, I'm going to be using GB Sciences, which is traded on the OTC exchange. So I Googled GB Sciences, and the first thing I did was I went to the page to find the About page to find the company's address. The reason that I like to find the address is because oftentimes these companies have fake addresses or are based in a sketchy strip mall in the middle of nowhere. And for me, I just don't trust companies that are based in sketchy strip malls. Anyways, I found that the address was based in Vegas, and I pulled up the street view and welcome to the front of GB Sciences. Now, this looks like a location fit for a company trying to convert marijuana to medicine, and this checks the first fundamental test. Look, they even have a good taste in cars. Although those cars could be owned by original investors who are about to be left holding the bag, but we'll see if that's the case later. Now, before you laugh off my location verification test as ridiculous, let me show you a company that had high volume and a lot of people were recommending to buy back in June. When I had looked up the address in Street View, this came up. This looks like a broken down residence in the middle of nowhere, somewhere smack in the middle of Texas next to a highway. Now, one could make the argument, that someone could build a successful business out of this, and hey, they even have a few little shacks here with smoke spouts. But for me personally, this is just too ridiculous for me to take a position. It looks like the CEO lives in that RV that he probably bought with the money that he got from the IPO IPO. Needless to say, the probability of a company like this working out of a shack and becoming successful is incredibly low. This particular stock, which I'm not going to mention, ultimately failed, but you can easily find it with a bit of research if you're still interested in more about the company. But the next day, everybody went on StockTwits and a bunch of other stock discussion websites like, oh my god, I don't know what happened. It's massively discounted. Everything's going great. And the reason that all these people lost is because they didn't do a fundamental check. They didn't even check to see what the company looked like from the front. Now, a lot of times people don't really care. They don't want to have an in-depth understanding of the company. They just want to make money. And if you're focusing on this, you're probably going to lose in the long run. You can't just listen to other people's recommendations. Okay, so overall, yeah, it sounds silly, but it's worth it to look at the address. And it really only takes a second at the very least. And it can give you an idea of what type of company you're dealing with. One of the first things you need to be concerned about when looking for marijuana stocks is that fundamentally many of these companies are a mess. They often are run in tiny operations and most of them are never going to be profitable. And this is especially true if you're focusing on penny stocks. So what this means is that you're going to need to perform a fundamental analysis for each company. Now, this is basically doing some decent digging into what the company is doing, their earnings guidance, who is leading the company, their balance sheets, possibly SEC filings if they're US based, as well as a few other things that we're going to be covering. And if I don't reach it in this video, I have many other videos covering what to do in terms of fundamental analysis and technical analysis. So let's go ahead and pull up GB Science's balance sheet. The first thing that I look for on a balance sheet is its cash on hand. If there is a small amount of cash on hand relative to the market capitalization of the company, that's a red flag for me. However, here we have increasing cash on hand, and that's a good sign for the liquidity of the company. Now, of course, if the company recently made an acquisition or other large purchase, they are likely to have less cash on hand, and thus that would be an exception, and also underscores why you need to keep up to date with what these companies are doing. If you're going to be taking a longer or swing term position, again, guys, if you're taking a day trading position, it matters a lot less what these companies are doing, but day trading positions, it could matter in terms of the news. Like if you want to trade off news or overhyped news, which I've talked about in my other videos, obviously news and fundamentals are going to be somewhat relevant to you. Check out the equity and liability for the companies. What I'm looking for is increasing shareholder equity as well as overall equity for the company. I feel like not buying a company with long-term decreasing equity and increasing liabilities is common sense, but a lot of people get pulled into a company's stories and completely ignore the balance sheet. Do not do this. Do your due diligence and look into the company's fundamentals if you're taking a longer term position. The next step is to check if there's any news for the stock that could potentially affect the share price in the short term as well as the long term. Even just glancing at the headlines can give you a good idea of what is going on. For this company, we see decreased shorts for the company as well as analyst recommendations, and the higher volume of news makes the stock more relevant than a lot of the quieter companies. If the media covers the stock a lot, odds are it's going to have strong volume, and if you could trade off it, you can make a decent profit. So these are all good signs. But open up the pages and read a little bit more to give yourself a better idea of what's going on when you're doing this research yourself. Okay, so the next step is to repeat this process, the process that I just gave you, for as many stocks as you can until you can make a watch list of at least 10 marijuana stocks that you think are worth watching. Also, if you're still struggling to figure out what a watch list looks like, you could check out my marijuana stock watch list for 2019. I put a link in the description below. I put all of my reasoning as well as the research that went into each stock as evidence for my recommendations. Okay, so the next step is how to get in at a good position. Much like you don't want to buy an overpriced car, you don't want to buy an overpriced stock, so let's go over how to find the best entry point. So again, let's go back to our Krone example. With Krone, we see the price is currently in the overbought territory on the RSI, and that's basically like being marked up. That's like having a car or a purse be marked up. The share prices are way too expensive at this point to get in, so what you should do is set up the platform to alert you when the share price becomes oversold, aka below the bottom yellow line. The reason you want to buy when it is oversold is because if it's discounted, that means that not only are you maximizing your profit potential, but you're also minimizing your risk potential if your analysis is wrong or if something else goes wrong, like a big piece of news comes out that tanks the stock. I never recommend buying into a stock unless you can get a good deal on it. And the best way to figure out if you got a good deal on it is if it's marked as oversold on the RSI. If you're a bit shaky on the RSI, you can take my RSI crash course. I put a link in the description to that video. It's a very quick video where I go over everything you need to know about the RSI to use it to trade successfully and find discounted stocks as well as overpriced stocks. Now, the next step is to figure out when to exit your position. Now, based on how long you want to hold the position, you're going to need to adapt your strategy accordingly. This guide focuses on swing positions, so what I'd recommend is holding until the price reaches previous resistance and or is marked as oversold on the RSI indicator. If you look at the time period of GBLX, for example, we can see a couple great entry points, and then several areas where the price point met near previous resistance, which would have served as good exit points to maximize profit. Likewise, the RSI also acknowledged these as being oversold during these time periods, so you would have had two indicators pointing you in the right direction. This is why, all else equal, I like to buy in and hold until resistance. If the stock price is heading for a more prolonged reversal, there are several indicators that you would be looking for, such as a more consistent dip above or below the SMA line, as well as larger real estate between the SMA line and the price action. These are the key signs of a stock reversal or a price reversal, and I cover these in depth in my 2 steps of a stock reversal video, and I'll also put a link in the description below to that video. I'm sorry to give you so many recommendations from other videos that I did, but I really think that if you're really motivated to learn the stock market, you should go over all these videos as well as other traders' videos to give you perspective. I know that a lot of my viewers are completely new to the stock market, so I want to give you the full depth of understanding of what you need to do in order to successfully start trading within the stock market. Anyways, to sum it up, if you're trying to take a swing position or a day trading position, a good strategy would be to hold until the price reaches previous resistance and or is marked as oversold on the RSI line. But anyways, I hope that I achieved my goal with this video of helping you find and evaluate the best marijuana stocks for 2019. And I hope that you have a better understanding of the sector and everything that you need to do to evaluate it using balance sheets and as well as Google Street View for location verification. If you still have questions though, don't forget to comment below or join our Facebook group, the Zip Trader Circle. All you have to do is push ask to join and then put a question, any question that you have. You can also introduce yourself to other members of the community. It's really a great place to ask questions from me as well as other traders, and I will always answer your direct questions on that Zip Trader Circle feed, so don't forget to check that out if you have any questions or you just want to be a part of the Zip Trader community. And as always, don't forget to hit that like button and also subscribe for more short, sweet, and simplified videos on how to trade the stock market. And I'll see you guys in the next video.